All right. Hi. Good evening. Kon Hao, can you hear me?
Yeah, hi Benny. Can you hear me?
Yep. Loud and
Okay.
clear.
Yeah.
Okay, guys, if you can hear us and see us on YouTube or Facebook, please type in yes so that we can know that you are hearing us and seeing us well. Welcome everybody to tonight's Investors Copy Time, and today we're going to talk about trading the foreign markets. And of course, we have Kon Hao. I'm going to make a short introduction, about him. This is the first time that he's appearing on our Investors Copy Time session. So welcome, Kon Hao.
Hi Benny. Hi everyone. Yeah. Thanks for
Yeah,
having me. Yeah.
awesome. And Kon Hao is actually dialing from Singapore, right? And yeah, so let me see whether you guys can hear us. Okay, awesome. Okay, we are ready to go. All right, guys. Just a brief announcement before we start. Right, so I'm just going to share my screen a little bit. Okay, so today we have a guest, Mr. Wong Kon from Singapore. I'll make a short introduction later on. But first of all, as usual, whatever that is being discussed here today are based on informational and educational purposes. It is not intended as any investment advice. So if you want to get any investment advice, please do look for a professional and licensed investment advisor. All right. So today we have Mr. Wong Kon Hao. I'm just going to make a brief introduction. Kon Hao has more than 20 years of trading experience in the finance industry. He has an investment and trading strategies, and he manages his own fund, okay, and founded Weipedia Private Limited, which is his company, right? And he's also a regular trainer at SGX Academy. He served as a board member in VWO and also a community leader with Citizens Consultative Committees, an organization where it plays a vital bridge between people and the government. So he specialized in the study of behavioral science or the market psychology, and he's also an expert in risk management, right? So he's been around doing, speaking in conferences and also a lot of other events, right? In the industry or whether in retail events as well. Okay, so he studied engineering. Yeah, and I'm not surprised that a lot of traders actually come from the engineering background, right? But he was passionate about investment and trading, right? That this led him to pursue after the financial market after his graduation. He started off as an apprentice in CIMEX as a floor runner in 1995. Now, of course, we don't have any floor trading anymore right now. I still remember even in Malaysia, crude palm oil trading used to be floor trading, but it's not anymore. So since he had been a floor trader, financial dealer, and active practitioner in the securities and derivatives market, right? So he has been participating in many organizations like Singapore Exchange, even Bursa Malaysia, the CBOE, Hong Kong Securities, and many other organizations. So he is someone who has been in the industry for 20 years, right? And as a professional trader right now, he is going to share with us today about how you can expand your investments outside of Malaysia, right? Because most of the time we're only thinking about the Malaysian investment scene. But right now, Kon Hao is going to share with us how you can participate in foreign markets, right? Especially in the US markets, because that's where most of the action are. All right. So, Kon Hao, are you ready? And I
Yes.
believe awesome. I believe Kon Hao has prepared some slides for us. And if you have any questions at all, just type in the questions, right? We'll bring the questions after his presentation, or if the question is related to his presentation, I can interrupt Kon Hao for a while maybe, and if you can answer the question regarding the slides. If not, if you want to wait until the end of the presentation, that would be better. All right. Okay, so Kon Hao, over to you.
All right. Thanks, Benny. Thank you so much, and thank you all for tuning in this evening. I'm truly excited to work with equity trade trackers, and also want to thank you CME for sponsoring the event as well as CIMB as well. Okay. I think yes, tonight I'm going to talk about how can you invest other markets other than Malaysia, but you don't have to invest out of Malaysia. In fact, I think there are brokers, CIMB, in fact, they carry the foreign products in Malaysia. So you don't have to go out of Malaysia to invest or trade in all this product. You can call CIMB to do that. So later I'll give you my take as well. Although I'm a Singaporean, I trade Singapore product, but yet sometimes Singapore product, the volatility may not be there, the opportunity may not be there. But as an investor and trader, sometimes I also want to constantly want to keep my mind active, and maybe Singapore market don't offer me the opportunity. I always look out on the other overseas market as well. Okay, so I'm going to share my screen right now. Okay, make sure I got the right one.
Yeah,
Yes.
so while you are sharing the screen, there's someone's asking what is floor trading, because we are mostly probably born into an era where it's all computer trading, right, or automated trading. So maybe you want to just the environment.
I think your audience are just fantastic. Before I complete already question asking. So okay, floor trading basically is it's just like today we trade. When you place in a trade, is all matched by computers. But back then on the trading floor, and who is the one matching the trade? It's not that long ago. In fact, 20 years ago, I was on the floor trading. So human, I'm a floor trader. I work for another US bank, and order given to me, I just, at the open market, I just match a trade using human power. You know, so in the past, it was human power to match the trade. But of course, today, how we match the trade is through computer system. Okay, so I think we'll just leave all the questions that you have. I'm excited that I'm going to. I have a lot to share, but I try to trim. Tonight, before I start, I trimmed down quite a few slides because I want to get into the meat, then giving you all the information. So I hope that to also have some time, at least 10 or 15 minutes, to do the Q&A. Okay. Okay, I'm going to share my screen right now. Is it okay, Benny?
All right. Sure, Konha, go ahead.
Yeah. Okay, so today my key topic is to eliminate fear in trading with simple math. So I think it works both for investor and trader. So before I work on this subject tonight, I asked Benny about the profile of your audience tonight. He says it's a mixture between investors and also traders. So that will be a challenge, but nevertheless, I'm still excited to share, because derivatives or the US market, the derivative is even more useful in the time of uncertainty and volatility, especially today. So I think I just want to summarize or give you the gist of it, is that I think either for investor or traders tonight, the topic will be relevant to you. For investor, you can use derivative as a hedging tools in this uncertainty. So as a trader, you got to choose the right market according to your psychological makeup. So like, for example, I invest, I also trade as well. So I make it very clear that when I invest in asset class. So stock is an asset class. But when I trade in another set of instruments. So I hardly trade in the stocks, because stocks are not just, it's not just, yeah, I mean, later we can dispute about that. But in my opinion, my experience, that stocks are not conducive for traders. Yeah, we can talk about that later. So later on, it will be in the topic of every instrument are designed for a specific purpose. So for derivative, if I trade, I'll trade in derivatives. When I invest in stocks. So so that's the whole gist about the market today. Okay, the topic. So again, we have the disclaimer. I agree with Benny. What we'll be sharing, or what I'm sharing, is based on my experience, my passion, and is thank you CME for giving me this opportunity to able to share some experience and my passion, that why traders trade derivatives, okay? Why investors invest in stocks. So whatever I'm going to share is not a recommendation, it's based on my knowledge. I hope I can pour all this knowledge to you tonight in a very short span of time. So after that, if let's say you're influenced by my delivery, that you want to take action tonight or tomorrow, you have to understand it's your own responsibility, okay? Now, just 3 slides just to thank CME for sponsoring. So these are some new feature that CME website have. You could, if you're trading the US market already, you can subscribe to it for all these free alerts. Okay, I'm just going to play this for about 1.5 minutes. Okay, I want to thank you, CME, for that. Let's move on to the next slide. Okay, just want to these are slides I want to deliver on behalf of CME, our sponsor tonight. Is that they launched this micro E-mini index, US index. I thought that, you know, all these years, over the last 10 years, I always hoped that the US would launch a contract like this that is small enough for retail trader to participate. And finally, last year in May, they launched this micro E-mini. So welcome. And I expect it to perform. And truly enough, 1 year have passed. They just celebrated their 1 year anniversary. Now you could see that towards the beginning of this year, in fact, the last quarter of last year, the volume picked up tremendously. I just want to mention this point that there's a reason for everything. And if the volume pick up tremendously, or I would say that the interest globally pick up tremendously on all these micro E-mini US index, there must be a reason why. So today I'm going to explain to you, it's not just want to showcase you that, oh, there's a lot of open interest, activities there, but the reason why people are flooding to the US market. Is it to buy or is it to hedge? So later on, we can discuss about it, okay, in a short while. So you could see that, in fact, this was quite latest. I think it's prepared in May, if not April. Okay, so I still remember the last quarter, I also did an event for CME. I remember that the Asia Pacific represents this part of the world. It was about 5%. That was last quarter of last year. And that means these are the North America, the Latin America, so on and so forth, the European nation, they participate in this micro E-mini. But over the just a span of a quarter year, the Asia Pacific is the only region, if let's say I'm not wrong, that have the interest have expanded a lot. Okay, from about 5% today is about 9%. Okay, so there must be a reason why the Asians are trading this micro E-mini, or rather the US indices. Okay, so this is what I have to speak on behalf of CME. Then my job is, as an individual trader, I just want to share the passion. Why is it so? Okay, but before that, I think I just want to share a few the market outlook, my opinion on the market outlook in managing today's uncertainty. Why the market has been going up, and what is the future or the direction of the rest of the year that we can expect to have. And towards the end, I think the exciting part would be, all of it are good because I really spend the time and the passion into it. And towards the end, we're going to take on going to share this very intimate thing that I have, is the trading opportunity and the market psychology in the US market. Okay, so if you can stay true with me, just about an hour delivery. Then after that, we're going to have the next 10 or 15 minutes for Q&A. Okay, let me just give you my market outlook. That if you ask me what's the reason why the market has been rallied since somewhere in March until today, and it rallied about 40% or more. There are two reasons. The first one is FED, called the Fed, and the second one is called FOMO. Now, what is Fed? Now, Fed, if you've been keeping track, or you may have already know, they did the unthinkable. They really, out of desperation, they did all they can. Let me just read to you a short note. What did they do? Okay, the Fed slashed interest rate to zero, almost zero. So promised to buy an unlimited amount of bonds, roll out a series of emergency programs, and is directing the purchase of junk bond. Okay, and I think you read the news 1 or 2 days ago. They are doing the PPP as well, spending about $600 billion. The whole intent is to save companies or more than to save jobs. I think it's a very good thing. They're doing something really good in the short term, but I'm not too sure is it a good measure over the long term. Okay. Now the other reason that why the market have rallied is because of FOMO. Now what is FOMO? Is this term is called fear on missing out. So now a lot of Americans, when they buy stocks, they belongs to the upper middle class, and they are the baby boomers or slightly younger than baby boomers, so they're quite well to do. It's still very fresh to them that in 2008 the market collapsed. It was a V-shaped recovery, very fast, and until beginning of this year. So the market kind of took a good correction. Now this time around, as the market do a V-shape, they have a fresh memories that could it be a V-shaped recovery as well. So a lot of FOMO, fear on missing out. They chase after the market to buy up the market. So on the hope that they won't miss out anything. So these are something psychological that I also want to let you know as well. So now I have another topic, but I just want to briefly share with you tonight that I say that I analyze, or rather that there's some similarity between 2008 and today's market. Now, what are the similarities? Let me discuss about the 2008 situation. Okay. Now, before the 2008 meltdown, you could see that market are trending up very nicely. Okay, so it was an uptrend. Then suddenly something happened because of the credit default swap, or called the subprime crisis, and the market dipped a lot. Okay, now the market, how much did the market dip? Close to about 20% within 2 months. Now, so this is a very important thing here, is that when the market kind of crashed 20% within 2 months, it is bad, because now let me give you a perspective here, is that if the market depreciated by, or crashed by 20% over a 1 year period, that's okay. Now, because the whole system, the whole government, the whole central bank, the whole industry, the whole country, the whole ASEAN, the whole G7 or G20, given time, they were able to find their way out, given time. But when the market is down 20%, too quick, too strong, too fast at a very short time, so it did not allow the market to have time to react quickly. Okay, so this was what happened back then. Then the market also have something very similar. It has a very strong recovery. It was about 50% recovery, if you could see that. Okay, now, but the issue is that the subprime issue, the credit default swap, did not go away. So the core problem of 2008 meltdown, it was because of the subprime crisis. So now, as the core issue, now remember the core issue is very important. As the core issue is still there, subsequently, so what happened later on, there's a wave 2, is called the Wall Street meltdown. So what is Wall Street meltdown? A lot of companies cannot take the pressure, and they start to close down, or they report very bad earnings, whether it's listed or non-listed. So there was a Wall Street meltdown. So as a lot of company falls up in a raid, then guess what? So a lot of companies also cannot fulfill their loans to the bank, so on and so forth. So the third wave back then in 2008, it was called the Lehman crisis, or the banking crisis. So that was a 3-wave. Now, so today I just want you to replace this subprime with COVID-19. I think that's really interesting here, is that this is now, okay? So earlier chart was 10 years back, or 12 years back to be specific. Now, this is now where you could see that market generally trend very nicely. There was an uptrend. Then somewhere in the middle of January, because of the COVID-19, US have a crash. Now this crash, how far did it go, and how short the time it happened? Okay, I counted the weeks. Okay, this is a weekly chart. You can count for yourself. It's between about 6 to 7 weeks. Now 6 to 7 weeks, it crashed by 38%. So I want you to know the behavior science of the economy, or the whole network of the businesses industry, is that when things happen too sharp, too deep in a very short time, it's very difficult for the market to find time to cushion it. Okay, so the same thing happened here, is that the market recover very strong. Okay, now then going back, if you think back about, if you're going to ask me what would be the direction moving forward, I really don't know. Okay, but based on the experience that we have, based on what we've just discussed, I think it's very important to understand that the core issue, what are they? The core issue is still COVID-19, but I'm more concerned about COVID-19. Will it dig out other dirts? Other dirts like social division that you could see. Maybe could be a debt issue. I do not know, but we have to be very sensitive. Now, so the other thing that I want you to look at is that, okay, before we look at that, the market went up to the high. The recent high was 27,500. That was the 9th of June. And today it dipped down a little bit, is 25,750. That's Dow Jones on 16th of June. That's today. So the next few weeks and months, is very crucial. We have to keep our eyes and ears open. Okay. Now, what is the thing that I'll be in days and weeks and month that what I'll be looking at? There's a few things, but because tonight I'm not discussing about market outlook, so I think the key is the companies around the world. Like in my audience in Singapore, I say that it's not just Singapore company. We have to look at the world itself. We got to be very concerned. We got to be very sensitive, looking at the rate of bankruptcy. Is there more and more companies going to go bankrupt? I'm not suggesting that they will, but we just got to read at the numbers, because the whole social fabric, employment fabric, we need all the SME. In fact, SME in Singapore alone employ about 70% and more of our workforce. I think this number applies across this, to US and Malaysia as well. So SME are very important. So we got to look at the rate of bankruptcy, and if there's too many, it will lead to a social problem. So that's my concern. And of course, relate back to the stock indices, you will know how to chart the path of the US market. I'm not suggesting they will come down, but I'm just suggesting that what we should look out for so that we can react. So we have to understand that as a market practitioner, myself, or even yourself, there's no way you can predict the market. Okay, but there's no way you can predict the market. But through some variables, it will make sense that how can we equip ourselves? How can we stay on guard? Okay, with certain principle, we just act accordingly by faith. Now, then there's I hope you like this analysis on the market outlook. So very quickly, I just want to go to the main topic. It means that what I've just shared with you is that market will be should still face a lot of headwind, because a lot of my friends they seek for free advice. I'm okay to give free advice here because they are my friend, and they ask me, is it time to buy? You know, of course later on you can ask me the question during the Q&A, but I want to drill down into the profile, the psychology part of every trader, what you should have. Okay, now there are three types of traders. Now let me explain to you what is trading. Okay, you have to differentiate very clearly between investment and trading. You have to differentiate very clearly. Now, I define that trading, unlike investment, it is the many small accumulated gains with lesser of the small losses that will accumulate too much. Now, trading is this. It's not about making a lot of money. Investment, yes. Investment, if you see something good, you put the money there, and given time, I hope you'll make folds. You make folds. One fold is 100%. But trading is never this as such. Now, trading is this. Let me give you a perspective here. Is that if you have, let's say, open an account with CIMB, you put $10,000 US to start trading. Now, how much do you want to make per trade? Okay. Now, I will make maybe about 1 or 2% per trade. Per trade could be intraday, could be a few days. And to me, it's a big business because it's a big thing, all right? Because $10,000, if I make about 2%, I'm making about $200. And to me, I never despise all these small little earnings, because in trading, it is the many of the small profits that will accumulate to much. So in the same context, when we trade, compared to investment, is different. Investment, sometimes I do not cut loss. But when I cut loss, it will be very painful. But trading is, I will definitely cut loss when I'm wrong. Okay? So in the same measure, if I'm going to make about 2% on my profit, in the same measure, when I make a wrong judgment, I will also cut with 2% or 1%. It means that my statement here is that in trading is less is more. It means that I try to do this, I try to polish my skill, where I try to make many of these 1 or 2% gains. But when I lost, I accept the loss, but I try to have a lesser 1 or 2% loss. So as you amalgamate all this math, all these numbers, the whole account, it just makes sense to me. And there's longevity in doing such. So as a trader, we're just interested to trade into a given volatility. So I just want to explain to you what I mean by trading. And trading is not just about making money. It's accumulation of small money. So when we make a mistake, when we're wrong, we have a wrong judgment, in the same measure, we have to cut loss. So that's trading. Trading, you have to cut loss. And when I cut loss, it's easy, it's brief, it won't cost me to have much of a heartache. Just cut and forget about it. Okay? If let's say based on the $10,000 US dollars account, $100 or $200 losses, just forget about it and just move on. Okay. Now, next topic is to identify exactly who you are. Okay, let me just give you this. I wouldn't say animation, but last time I used to be, for one period of time, I used to be a stockbroker. But days that stay being a stockbroker for about 8 years or more, in fact more, I have about collectively between institution, corporates, individual, collectively, I think I have about 2,000 accounts. But these accounts helps me to understand their psychology. Okay, now a lot of individual traders, I call them, they belongs to this class called the very busy working class. They may be upper management level. They're very busy with life, and they know that when they're about 40 or 50 years old, they have certain urgency that they need to invest, they need to trade, because they know that the company is not theirs. Maybe when the time's up, the company may ask them to leave. When the time's up, they have to retire. So they have some money, but they are very, very urgent to invest in it, to trade it. But the thing is that because they're very busy with their work, they are good workers. But when it comes to investment and trading, in Chinese it's called 一知半解, they like half bucket, and usually they don't do very well. So they have this issue. Now, her name is Catherine. It's just a fictitious name. So they have this issue that Catherine have this issue between whether she is a trader or investor. Now, she started, in this example, she started as a trader. She wanted to make quick bucks. Then gradually she became a long-term investor. It's very fun. Okay, I hope that this illustration will speak to many of you, but my job here tonight is not to shame you. My job here tonight is to share what I observe, what I've been through, and I hope that through some understanding, you will also calibrate yourself into a better standing tonight. So Catherine said that, oh, price dropped a lot already. My friends say it's a good time to buy now. I will buy now. So she bought. And then, oops, it is okay. I'll buy some more to average it. See, I'm right. Stress. Broke the low. She cut loss. Okay. Then after that, she sigh and say that, hey, please don't tell me I cut at the low again. Then she'll call me again. Back then I was a broker. I said, hey, how do you believe that the broker saw my stops and triggered my stops? Then I say, no, I don't think so. Because I think between Singapore and Malaysia, I think I speak on behalf of Malaysia. When it comes to all this monkey business, I think Singapore and Malaysia were quite strict. I don't think that the brokers can see your order, or maybe they can see, but I don't think that they will see your order and trigger your stops, because that's, to me, is considered illegal. Okay, so I don't think so. But exactly the mass market, they behave as such. So usually when they cut loss, they cut around the low. Okay. Then see, I told you market is coming down. I don't believe this. Never mind. I will wait for it to come down. I'll buy back again. So she's quite angry. But market didn't wait for her. Market continued to move up, like right now. Okay. So then Catherine said that, I think I'm right all this while. I better buy now. If not, I'm going to miss it again. Okay. So does it sound very familiar to you even today? I better buy now. If not, I'm going to miss it again. So, but when she bought, I say, okay, in the past, I was trading. It doesn't work for me. But now I think I want to buy and hold. Okay. So the moment she bought, market took a dip about down 30%. Then she looked at a stock, she called stockbrokers, and she studied into all the PE, PV, or whatever. And then she said that, wow, this stock is very good. It pays dividend, all this and that. I think it's a good stock. I will hold it. Now, then she said that I'm a value investor. And most of the Singaporeans investor are sad to say is that when they say they're value investing is only after they bought the stocks, only after when it depreciate by 30%, then they say that it's a good stock. Oh, I am a value investor. I want to keep this stock. So it's not very truthful to themselves. Okay. So after that, the market continued to move down, and she said, I can't believe this. Okay. So it's very psychological. Now, so it's very important that we have to identify exactly who we are. And you can be the four of them. Okay. It's just that at any time when an opportunity comes by, you have to find the right fit. Means that if this is for long term, you behave and you plan and you execute like a long-term investor. If it's for short-term investor, you do the thing. Okay, so it's a short-term trader and intraday trader. So tonight I'm not going to discuss about this because, in fact, this topic is about an hour long. But what you could do is that you could go to below on the right-hand corner, Weipedia.com/trade type analysis. So you take some time to read into the survey, and then you try to attempt the 10-question survey, which I've crafted myself. Then you'll find exactly who you are. Some very 10 simple questions that will dig out your inner soul, exactly who you are. So when some of them, they do this 10 MCQ, they got very angry after they realized that they are short-term trader, because all the while they thought that they are long-term investor. It seems like to me that many of the investors, they feel pride that I'm a long-term investor because it's a stature kind of thing where they felt that they're stable, but deep inside them, as they do the survey, then they realize that they are short-term trader or short-term investor, where they refuse to accept the fact. So, but you just do it as a knowledge to know yourself. Then after that, don't get angry with me. You just have to know that who you are. Then after that, you plan accordingly on whatever opportunity that comes by. Okay, so how to make trading plans according to your trade. Okay, now, so tonight I'm just going to cover on I'm not going to talk about being a long-term investor. I'm going to cover the other 3 quadrants. Now, being a short-term investor, it means that, what do you mean by 3 months to 3 years? It means that your holding period. It means when you see something that is good, that you have an intent to invest in it. If you know, you have to start to formulate. If I'm going to invest in this assets, how long? So maybe about 3 months to about 3 years. So I will classify you as a short-term investor. Now, being a short-term investor, earlier I think I mentioned that every instrument are designed for a specific purpose. Now, if you're a short-term investor, I will go for stocks, and I can consider derivatives as a hedging instrument. Okay? Now, if you were to be a short-term trader, now it can be all 4. Okay? I am all 4. So if I have time, I will trade some intraday if I have time. Okay? But most of the time I don't have the time, so I don't trade intraday. Even I see opportunity, I don't touch it because I don't have the time to manage. You know, intraday means that I have to get in today. If opportunity arises, by end of the day I have to square off. That's intraday. But I know that I don't have the whole day. Just like today, I don't have the whole day. Now, so if you're a short-term trader, means that when you see an opportunity comes by, you have to identify very clearly how long are you going to hold it. If your idea is maybe about 2 days, few weeks, but not more than 3 months, then likely this is called a short-term trading. Short-term trading, now notice that how I phrase the instrument. I classify that you try your best to go for derivatives and consider stocks. So if any opportunity comes by that is 3 months or less, our first priority is derivatives. That doesn't mean that I will not trade the stocks, but my priority is derivative. I just want to clarify here is that, again, I made a statement, every instrument are designed for a specific purpose. And definitely if I'm going to trade intraday, I won't do anything else, but I'll just go for derivative. Okay, because that instrument are designed to trade intraday. Okay, so that's all I have to say. Now, I'm not trying to I'm not trying to be a salesman to tell you something that you have to do that, but I just want to share a few out from my personal knowledge and experience, how to get it, do things rightly. Okay, so when you get the right matrix to do certain instrument correctly, you find that you can sleep more peacefully. Yeah, so later I can explain to you how this US indices work. It may sound like a very big thing, very risky, there's some leverage, but in fact, if you understand about contract value, it is a joy. I would say that it's a joy to participate in a given volatility. So now, last part about the attributes of derivatives. It was this event about 2 years ago by IOSCO. Now, who is IOSCO? They are the global regulators. So I was in this panel discussion to talk about active trading, to talk about how investors should use derivatives to hedge. So now, after 1 hour of panel discussion, so among the floor, there's this gentleman that came forward. He's a gentleman, and then he said that I don't have any question to ask you guys, but allow me to summarize what you guys have just spoken for 1 hour. That to correct me if I'm wrong about understanding of derivatives. Then he said that, or index futures trading. Okay. Then he said that for index futures or derivative, they're referring to the same thing. He said that derivatives is like eating chili padi. Either you like it or you don't like it. If you like it, you will take it. For example, if I'm going to have a fish soup, okay, I think Singapore and Malaysia, we love fish soup. And I will take about a teaspoon of chili padi or half teaspoon and put on my fish soup, or stir it, and we'll finish up the fish soup and it tastes fabulous. Okay, but it makes no sense for me to, even I like chili padi, to take 1 tablespoon of chili padi and put in my fish soup. It will kill the taste. I'll be burning. So in that aspect, I know what he's saying. He's making a parallel comparison, which I'm so impressed with him, because when he gives me the example, I know that he understands what is derivative. It means that derivative is so important to be part of, especially in the very sophisticated world today. Moving forward, it's going to be much more volatile, more uncertain. It is important to be included in our investment portfolio. Now, I will always about 10%, I'll invest 90%. I always have 10% money parked in some margin account, okay, to trade them, to keep my mind very active. But when the market get very volatile and uncertain, I'll reduce my assets, my stock holding, because market is not too conducive to invest. And I will increase my margin account to maybe about 10 to 30%, because when the market get volatile, it means that there will be more trading opportunity available. Okay. So I just want to move on to the right thing. Not the right thing. All of these are right thing. Okay, so all these are right thing, but I just want to move on very quickly because I want to take on more Q&A. I'm excited to share. Okay, now how to choose the right indices, US indices for yourself. Okay, now the thing is that if you have been trading for a while, say what I say tonight class is very I felt that it's a very challenging task to do because I don't have a very specific idea, the background of the listener. Okay, so some of you are investor, some of you are trader, but trade in stocks, but you're trading derivative. I don't really have an understanding. So, but anyway, if you have been trading for a while, let's say you trade indices futures, or you trade the futures or forex or whatever, you find that you have not made your keeps. You know, I trained for so many years, but you don't see a positive result. Now, this program will help you. Maybe you have chosen the wrong market to trade. Now, why I say so, okay? Now, to understand all these index futures of any futures or gold or crude oil futures or derivatives, there's 2 things that I want to share with you is a trick. Okay? Now, once you know these 2 things, the rest will be easy, because all these contracts, whether it's the oil, Dow Jones, gold, precious metal, or currency futures, all these are just markets, and all these, they bear a very similar volatility. Now, as a trader, what we do is that we're not buying into intrinsic value. We're just participating in a given volatility. So now all these are just markets, and the volatility, I can say that is pretty similar. Now, so these are the 2 tricks I want to share with you. Once you get it right, the rest will be the same. That means that after tonight, when I share with you the US indices, after a while, you want to expand to precious metal. Okay, you can go ahead, but you understand about these 2 things. Number 1 is called the contract specification, and number 2, you have to understand what you're buying, called the contract value. Okay, what is contract specs? It means that it's designed by the exchange. In this case, the micro E-mini Dow Jones is crafted by CME. Okay, it means that there's a minimum movement is 1 point. 1 point is worth 50 cents US dollars. 50 cents US dollars. Now, when you see an opportunity, say whether you want to buy or sell short, because in US indices trading, the beauty about it is that you don't just buy, but if you see the market coming down, you can sell short. Okay? So I believe most of us know that. Say, for example, you find that, but you want to buy. Say you have a view that market is still going up, At 25,000, based on certain studies, you find that there's a chance that market will be going up. So you buy one micro E-mini Dow Jones at 25,000. So, but what does it mean? Now, two things you have to know. First is called the contract specs. And earlier I mentioned that it states that every 1 point is worth 50 cents US. But if I were to buy one micro E-mini Dow Jones futures right now at 25,000, what does it mean? It means a lot to me. So since 1 point is 50 cents US, you take 2,500 times 50 cents US is equal to 12,500. It means what? It means that I'm buying 30 blue chip stocks worth $12,500. Or if you find that you feel like shorting it at this point in time, it means that you're hedging or shorting 30 blue chip stocks, US stocks, worth $12,500. So to me, it's meaty and it's meaningful. Okay. Now, and what are you buying? Let's say you're getting into the micro E-mini Dow Jones. You're buying all these stocks, 30 stocks worth $12,500 at this point in time. Let's say the index is at 25,000. Of course, there's other micro E-mini index. You can take a look, so you can do a screen capture. But if you want the slides, I will send it to you anyway. Okay, so later I'll give you instruction how I can send you all these slides. So you go and study all of them. To me, earlier I say, I think I make a wonderful statement here is that as a trader, we are getting involved in the given volatility. So whether I'm trading the S&P, Dow Jones, NASDAQ, Russell, they all bear something. They bear volatility, and their volatility are quite similar. Okay, now how to choose the right contract for yourself. Okay, but before that, I just want to give you the earlier I shared about Dow Jones Index, 25,000 worth 12,500. Okay, so if you participate in Mini Russell, now who is Mini Russell? Mini Russell are you're getting involved in the US small cap stocks. Okay, now all these small cap stocks are very meaningful because they represent the SME of the United States, and SME is about 90% of the whole economy. Okay, same for Singapore, I believe, same for Malaysia, or it's the same for US as well. SME are the pillar of the whole country. Okay, now because when we buy US stock, we'll think about Google, Apple, yes, but they are, if in terms of a total cap, they are just about 10% of the total cap, or all these MNC. Now, for Mini Russell, it means that now it's at 1,005. The contract value. Now, remember just now what I said, discussed with you. There's two things that you have to understand: contract specs, and more importantly, is the contract value. It means that whatever we buy or we sell short, there's a value, the full value tied to it. Okay. Now, when we buy or short Mini Russell, micro Mini Russell at 1,005, it means that we are buying or selling short 2,000 SME worth how much? 7,500 US dollars. So now, so how about S&P at 3,002 right now? The contract value, the total worth is 16,000. It means you're buying a basket of 500 stocks worth 16,000. And NASDAQ at 9,008, you're buying into 100 tech stocks worth 19,600. So the contract value is of essence. You have to understand. Of course, there's margin, but I will let the broker talk to you how margin works. Okay. Now, I want to get on to the next point, which is very important, which is on the part 3, how to qualify if the market that you're trading or you're about to choose to start, is it suitable for you? Okay. Now, let me just get into this very interesting topic. Just do a thumb check, make sure I don't overrun myself. Okay, I think we're good. Now, in a very typical trading day or overnight, now I noticed there's a law of order, but these data being collected, that was before this year, and market was generally overnight net change. Say for example, let me give you some idea here. I think between Singapore and Malaysia, investors and traders were very familiar with Dow Jones. Dow Jones, say at 25,000, the whole value is at 25,000 Dow Jones. Last year, when we wake up, first thing first in the morning, we'll look at our what's happened overnight. That if I can help you to recall, it's very common when you wake up, when Dow Jones is about 25,000, say for example, that, oh, market is down 300, market is up 100, market is down 150, up 50, down 75, sometimes up 500. But before year 2020, for market to down 1,000 is quite not the norm. Maybe it happened once every whole year. But in the norm, last year it was, if down 500, what does it mean? Last year, that was before last year, down 500, you take down 500 minus 500 divided by 25. It means that the overnight net change was down 2%. Okay, and that was the down 2% is important because it's the extreme of the regular market. Okay, but today is different. Today, I observed that since the cross of 2020, the market dynamic have expanded. Now on a regular extreme. Okay, so now when you wake up, Dow Jones is down 1,000 points. It's no longer a surprise. Okay, so is the market norm, but the extreme end. Okay, not every day we experience Dow Jones down 1,000. If it's down 1,000, you just take 1,000 divided by current 25,000, say for example, it will work out to be minus 4%. So I want to hold this number here that, oh, so in a regular trading day, but more on the extreme end, is down or plus 4%. Okay, so this is how we're going to measure our risk. Now, these are just some example here, beginning of this year. Before that, we don't see this kind of movement, but you could see in March, April, May, market experienced this kind of plus and minus 4% overnight or within the day. For example, on this particular day, or in fact, this is day chart, okay? Yeah, not weekly chart, so my correction. So please help me to change to day if you receive my handout. Now, this is a day chart. If you happen to short at the day low and the market close, sorry, you buy at the day high and the market closed at the low, so that in this situation, you're kind of stuck. So you're minus 4% down, okay, based on the index benchmark. But on this day, say for example, you short on this day, but next day the market gap up, it went up to the high. So between the price you're short and the high price, that is the next day. Technically, the market's up 4%, okay, because you're short, so the market is against you. Now, I just want to give you very quickly, because that's not my point about how to trade the market, but I just want to get you have a sense of, on a regular trading day, on the extreme end that you could see in the new norm is about 4%. Okay. Now, if you were to choose that you want to start to participate in Dow Jones, earlier we discussed about Dow Jones, the contract value based on 2005 or 25,000. Okay, so 25,000 is 12,500. So please help me to make correction here as well. It's 12,500. Now, say for example, you take 4% times 12,500, it is equal to plus and minus 500. Now, what's my point here? My point here is to assess your emotional well-being. Okay. Now, I want to talk about losses first, because once you're able to manage your loss, you're good to go. Okay. Now, I'm very different from other mentors that you may have. I always want to talk about loss, because once you can manage your loss, the other side is easy. Now you got to ask yourself, if for you to participate in one micro E-mini Dow Jones, which the contract value right now is about 12,500, in the situation you're caught within the day or next day, that one we have studied, okay? Within the day or next day when you're caught, how much you lose? Within the day or the next day, that means you lost about $500 US. Now I'm going to ask you this question. It's very emotional. It's very individual. Are you okay? If I say that, let's say you're Mr. Tan. Mr. Tan, are you okay that within the day, emotionally, are you able? Can you sleep well? Can you eat well? That one day you lost $500 US. Are you all right? They say, cannot, no way. No. Then maybe micro mini Dow Jones is not for you at this point in time. It doesn't mean that you cannot trade that. It just means that at this point in time, maybe it's not for you yet. Okay, then like I say, we're trading into the volatility. Are the other US indices will have the similar volatility, but the contract value is different, is smaller. Okay. Now let's look at mini Rasa. At 1005, the contract value is 7,500 US dollars. Now 4% of the whole value is 300. Means that on this today volatility, if you're caught within the day or the next day, that means I measured that likely you will lose about 300 US dollars. Are you okay? Emotionally, can you eat well? Can you sleep well? Will you not scold your kids? So if the answer is yes, then this contract is for you. If the answer is no, then continue to fine tune all these micro contracts that CME may have. Okay, then you continue to search because the volatility is all quite similar. So you have to start off at the right footing, because once you're able to control your emotion, I would say control, but manage your emotion, then the rest are much more easier. That means when we look at things, we don't look at it as money, how much we make anymore. We look at it as opportunity comes. How am I going to take it? But make sure my emotion don't come into play if the market temporarily is going to go against me. Okay? So this is just a demonstration that during the Asia hours, the micro E-mini contracts are still good, back with volume. It's not just during the US hour, but even Asia hour. So highlight before we go to the Q&A tonight. Looks like I overrun my time a little bit, but I guess I'm okay to run beyond 1 hour if you have the time with me. Now, what is trading? Trading, we're looking for volatility and make sure that the contract that we are trading in is good. There's always packed with liquidity. That means the spread that we're paying is always there. Very good spread, not elephant spread. Okay, so the objective is good volatility means that there's opportunity. When there is volatility, it means that there's opportunity. But make sure that with the contract that we are trading is packed with the spread is very fine. Okay. Now let me just introduce you this site. This one is not new to many, but let me just share with you how to identify those hammer that carries weighting. That means those that worth looking at it. Okay, I call them the hollow hammer. Okay, hollow hammer, it means what? Now, to identify a hammer, first, the rule is that it must come from a downtrend. That means market must sell down somewhat. Open here, it went down to the very low for the day or for the minute or whatever. It reached a high, and finally it closed around the day high. Now, I don't have time to go through the psychology part of it, but just think in terms of this whole structure in the psychology play. Open around the high. During the day, there's some accident happened or some sadness or fear that it went all the way down. But before the end of the day, it rallied up. So to me, psychologically or emotionally, or maybe by events, definitely there's something to it. Okay. Now, the next slide I'm going to share with you how to identify those that are good, or rather those that carries higher weighting. Okay. Now, let's look at this chart. Okay, let me just quickly go through a very quick one. Now, I want to go through this. These are daily chart, the last daily chart over the span of the last 3 to 4 months. Okay, now you could see a hammer, which this is a good one. This is, when I say it's red, it's not so good. Why? Because it didn't come down from a downtrend. Okay, then this is also a hammer, but not so good. Later I explain to you why. This is a hammer. This is a good one, and market rally. And finally, I prepared this this afternoon. Okay, finally, yesterday the hammer. This is not a good one, and this is a good one. Okay, later I explain to you how it works. And yesterday hammer, the closing, it was good. Okay, now what is this? Let me explain to you between the new norm and the norm. Now, in the norm, 55 points. This is S&P. This is a daily range. 55 point is the norm of the norm. Okay, very norm. Okay, so that was beginning of this year and last year. 55 points, it was norm, and then a bit extraordinary. It was about beyond 55, about 86. So whenever I see the hammer comes after a downtrend, but the range, Okay, the whole day range is quite wide, much wider than the norm. Back then, the norm is 55, 50 to 55. Then I know that between this whole range, there's a lot of emotion that pours into it. Then this hollow hammer became a very a point of study that I'll take a closer look at, and whether should I enter a trade or not. Okay. Now, as we move on, why I say that this is not very good, because the new norm, okay, the new norm in the norm now is about 60 plus or 70 points. That's a new range. Okay, so we cannot reference back to the old. Now the principle remain the same, but the parables, or rather the parameters, sorry, not parables, the parameters have changed. Okay, the new norm now I take about 64 points as the norm. Now, what is a bit stretchier and there's a lot of emotion that pours into this hammer, or I call it a hollow hammer. It is maybe about 100 points, close to 100 points. If it's surface on the daily chart, I would think it as pretty good. I should decide if I'm going to take on the trade or not. So I just want to share a little bit insight. I hope that they will help you to navigate how to select. If you're an investor, you may want to consider derivative to hedge them. Talk to your broker how to use that. If not, then later I'll introduce another program that you can learn about hedging as well. Okay? So these are just some understanding here that maybe I would say that this is a daily chart, say it's an hourly chart, where you see that there's a case of buying about here. And how to manage your risk is this, very simple. It could be a 3 hours chart or so. Okay, if you find that 2860 is a buy, and you know that the low has been established, moving forward it should be up. But like what I said earlier, being a trader, we always must have a measured risk. Okay, when we trade and when we trade the derivatives, there must always have a measured risk in place. It's different from investor. Investor, we generally don't cut loss because we're buying into intrinsic value. Okay, but of course I do cut loss, but when I invest, I cut loss. Sometimes it's quite painful. Okay. Yeah, you can ask me the question if you want to later on. I'm okay to go for another 15 minutes. I have no issue. Okay. Now, so let's say you want to buy 2860 and you plan to cut loss at 2810. Now, then back in your mind, what do I mean by measured risk? Measured risk, it means this. Before I trigger, I already know in the situation that I am wrong, how much am I going to risk? Okay, so that's very important here. Now, if it's going to cost me 50 points, the contract spec states that 1.5, 50 times 5 is 250 US dollars. Then I will decide how many lots I would like to buy then. Okay, so this is some insight for you to think about. Okay, so we're going to go to Q&A, but before that, if you want the slides, because I know that some of you cannot stay through, you just QR code me. Let me know if you want the slides. Make sure you type your email address correctly. Can give me about the next 1 or 2 days. I'll send the slides to you for you to reference. Then I just launched a new program here, Hedge and Trade with Derivative. So I will touch on this topic, how to hedge using derivative. So I think for the stock investor, you will like it. So you just go to weipedia.com/e-learning. Okay, of course, the other rich resource that you can go into is cmegroup.com education. Please go there if you could. And do follow this Facebook news channel. I think you'll be blessed. Every day I'll post good news, good articles. Some of articles I have my contributor that wrote it. Some of them I wrote it myself. Some of them I read, I like it, I summarize it. So my Facebook became like a news channel. So you want to follow what I'm reading, go to my Facebook page, my name 𝐿𝐻𝐽, join together, like or follow. So whenever I post a news, you will receive it. So that's my YouTube and Instagram. You can like it. And lastly, if there's any question about, especially on strategies, okay, please email me. I'd love to receive them. My email address is 𝐿𝐻𝐽@weipedia.com. Okay, with that, do you have any question, Benny? Yeah.
Yes, 𝐿𝐻𝐽, thanks for the presentation. In fact, we do have some questions. Okay, you mentioned earlier like these micro mini futures. and 1 point is 50 cents US dollar, and the margin is what, like 2005, is it, US dollars?
I'm not too sure about Malaysia side because the margin sometimes it varies from different country to country. So you may want to check with your broker. For Singapore now they have, because of the they have used to be about 35 times, but now they have reduced it to about 10 times. 10 times means that if, let's say, contract size is about 12,500, it means that you have to come in with a margin of about 1,250 US dollars. That means in margin trading is always as such. That means you don't have to pay the full sum, $12,500, so as to take advantage of the full contract value. When I say 10% margin, it means that you have to place in at least 1,250 to participate in one contract. Now, personally, do I do that? I don't. Okay. But if you want to trade very thinly, you're allowed to. Means that if the leverage is about 10% of the whole contract value, if you want to do that, that means you trade very thinly. You place in $1,250 just to trade the full contract size. You could do that, but as a good steward of my own money, usually I don't do that. I will put in $10,000 US dollars. I will trade maybe about 2 or 3 lots. Okay, so that's about it. Usually, if I put in $10,000, I could trade up to maybe about, how many lots would that be? Maybe about seven lots. But I don't do that. Okay? I will trade about, this is risk management, because I do not want that my position that once I place in, and because sometimes market will swing, that I receive a lot of margin call from my broker. I do not want that because it will affect my emotion. So I just want to trade very freely, trade very lightly, based on opportunity, but not based on leverage. So the important thing is, well, I never concerned about leverage. Always concerned about opportunities, and I'm very mindful. Now, this is something I want you to take back, is that be mindful that when you buy, you have to be aware that what is the contract value. Okay, I think before I take on the next questions, because there's one slides that I have, which I revamped the whole slides today. I got so excited that I missed out one very important information. Could you pan to my screen if you can? If you could see here, okay. Can you take a snapshot? Benny, could you see it clearly?
Hold on, Faiz. Can you put on house screen? Yeah, hold on. Okay, yep. CMB contact. Okay, CMB contact. No, no worries. I'll put the contact on the comment section for the guys to look at it lah.
Yeah, correct. So because some of you may want to get to know about margin, all these are very good questions, but how not to receive margin call, how to manage margin, I think the brokers will be able to help you. CIMB, just give them a call or email them. Okay, but I will also forward you their number to you as well, because if you have requested receive the slides, I'll just insert their numbers in. So do give them a call. Yeah. Okay. I'm ready for the second questions.
All right. Just to give a comparison, right? Because remember this, the whole idea of we have this micro mini futures product is so that everyone can participate, especially retail, right? Just to give a comparison, what is the standard size look like?
Oh, standard size. How many lots?
Yeah.
I mean.
Yeah.
Is that your question?
Yeah, it's like 1 point is, because normally when they started the Dow futures, right? So if I'm trading the Dow futures contract, how much is the value, and what kind of margin would you want to trade at least one contract?
I don't quite understand the question though. Yeah, would you like to rephrase that? Is it like, how many lots? How many lots would you like to trade, or?
No. How many lots? Like if let's say I'm trading the Dow futures, not the mini, not the micro, right? If I'm trading Dow futures,
Yeah,
1
so it's
point
about
is
10 times. 10 times.
Sorry?
10 times more.
10 times more lah.
Yes, correct. Yeah.
So your margin is probably, you have to put another 10 times more lah.
Okay. Yes, correct. Yeah.
Yeah. So last time, I mean, if like 5 years, 10 years ago, if you only have to trade the Dow futures, you have to go for the standard size. You require that kind of money, lah, right? So now at least
Yeah.
you can manage it
Okay.
better.
In the past, when I was hoping that there's such thing as micro E-mini, but of course I do not know what term is that. They have the mini futures, but they also have the regular, and the regular are really huge. It's not within the reach of the retailer, but anyway, the regulars have phased out already. So now it's between the E-mini and the micro E-mini, which I just spoke about today. So generally, the E-mini is about 10 times larger than the micro E-mini. So the micro E-mini today I spoke to you is about 10 times smaller. So if you find that one lot, maybe mini Russell or mini Dow Jones is not too meaningful, but if you're going to trade one lot of the E-mini, which is too big, then you just got to calibrate where you trade maybe 2 or 3 micro E-mini. So you just adjust according to your comfort level. So the comfort level is very important. Okay, so I think go through the slides. The contract value 4% off, because now the new norm, the risk is different. So you take 4%. Okay, now 4%. I do not mean that it will come, but we just prepare ourselves for the worst in case we are stuck. Okay, so at least I know that whether emotionally I'm okay. So the emotion part is very important. Okay, yeah, thanks, Benny.
All right. Okay, so I have a question here from Wong Hong-ji. I'm just going to put this question up on the screen. He's asking, what are the advantages of using services of offshore US brokers versus local brokers like CGS-SIMB in terms of reliability and cost saving?
Okay, let me speak on behalf of being a Singaporean using a Singapore broker to trade CME product. Okay, I think that would make more sense, right? Yeah. So now I'm speaking on behalf of CIMB Malaysia. So now, yeah, this question is asking whether should I, as an individual, open account overseas, or should I open account with a local broker, which is CIMB, to trade the mini contracts? Okay. Now it depends. The thing is this. Okay. Now, let me speak on behalf of my Singapore context because it will be the same. That means the question is, let's say on being a Singaporean, I say that should I open an account in US to trade the US product, or should I open an account with my local broker to trade the US product? Now, it depends. If you like the system over in US, you find it's very robust, then go ahead. But there's one thing that I'm very concerned, especially in the last 10 years, last 15 or 10 years, that you could see that whenever there's a huge movement, okay, like 2008, like today, usually, but today is still not that bad compared to 2008. Maybe have not come yet. Now, usually a few brokers and few banks will go bust. Okay. Now, at least for Singapore and Malaysia, we are function as a trust account. The brokers, Singapore, Malaysia, and Hong Kong, that these brokers are function as a trust account. It means this. Now, trust account is very important. Say, for example, for me to open an account in US to trade the US product, I would say that it's more like just to have a bit of fun, F-U-N. I will do that. But if you ask me to put serious money, a few $100,000 to the US broker, there I will be a bit concerned. Why? Because of the trust and segregated account that Singapore, Malaysia, and Hong Kong we have, the brokers and the banks. It means this, that the money that I place in, the deposit that I place in with my local broker is separate from the broking firm. Means that in the event that a broking firm is insolvent, they will not be able to touch this money, because when they open an account, there's a separate name. It's separate from the company. Okay, that's what I know for Singapore. It's called a segregated fund. It's a trust account. I think it applies to Malaysia and Hong Kong as well. But I'm not too sure about the US stock brokers or futures broker I'll open account with. I'm not exactly sure. So that one you have to find out. So I think it's more of a security issue. I would still prefer to trade through my local broker, the CME product, than putting money overseas. Putting money overseas is more like having fun, just to enjoy a little bit. That's all. Okay. Yeah. I hope I answer your questions.
Yeah, and I guess it's also better to open in a broker which are regulated, right, and
Yes.
by the regulators themselves. Because there are many other different brokers. Some of them can be like Cyprus or British Virgin Islands, which are offering the similar product, right?
Yeah.
A lot of these bucket shops as well. So I think it is better to look for regulator. But of course, in you said rightly, Konhao is basically the same, right? You set up here, you are regulated, your accounts are protected, you have trust accounts and so on and so forth, right?
I'm more concerned about the deposit I place. Maybe the system over there may be more robust, but I do not know. But it's the deposit that I'm more concerned. I want to make sure that my deposit are good, are fine in a time of huge crisis. Yeah.
Mhm.
Okay.
Okay, we actually have someone went to your website and did the test. So I'm just gonna show you here.
Okay.
He has done
All right.
has done the test. So the result shown that he's a short-term trader, but he holds a few stocks, 40% of holdings, more than 10 years. Should he consider as long-term investor? But why is it showing that he's a short-term trader?
Okay, so basically the MCQ, it just represents that your inner soul, the inner soul in you, that who you are. So there's a kind of disparity. Yes, you may be some holding some stocks, but I'm not too sure that whether are you really enjoying holding that kind of the stock for 10 years. Do you really enjoy it? But the survey shows that deep inside you, actually, you have this. You are a creature of you like short-term gains. So there's nothing wrong to like short-term gains. Like I explained very clearly that there's nothing wrong. So don't place a stigma that short-term traders are the men on the street that are unstable. No. Short-term gains, if you know how to manage correctly, earlier I said very clearly, is that small gains being accumulated. So for that friend that asked the question, yeah, you can continue to hold the stocks, no issue. Yeah. But deep inside you, that's who you are. Maybe you also will want to consider to explore a little bit of trading into the micro E-mini first. Just trade one lot. Maybe you're the 5 lotter, 10 lot lotter, but just to have fun, you try one lot, get a finger wet a bit. Then you check on your own well-being. Do you find that there's a lot of fulfillment? You find that your mind became very active. Yeah, it's very fun. Then maybe you remember my statement. Yeah, so finally I understand that trading is small accumulated gains that make it much. Less is more. Okay? So yeah. So that's my answer to you.
All right. Okay. So there's also a question about, I'm not sure whether you want to attempt to answer these questions because it's all about market direction.
Now, I have to make it, I'm not all-knowing. So if I know, I'm very honest, okay? So if I do not know, I just tell you that I do not know.
Yeah.
Just let me. If I cannot speak on behalf of the exchange or your country, then I'll just say that I'm not fit to answer the question. Yeah, please. Market direction, I think I'm fine.
Yeah. So for those who are interested to know more about the product, because of course CGS CIMB is one of the sponsors for this event, so you can give them a call. I've already put in the comment section. Their numbers are there. Their email is there as well. So you just give them a call if you're interested to know more about these products, because there are questions about how much margin you have to put in, how big is the size and so on. So the best is to contact them so that they can give you more information. All right. So now about market direction, Konhao, there is a question. Let me just put it up. Okay, this is from Jack Tan. What is the current trend since Dow Jones is moving out now? I'm not sure whether he meant moving up or moving out.
Okay. Okay. I just take it your question very plainly, whether is it out or out. So what's the direction of the US market now?
Yeah.
Honestly, the direction of the US market I felt is this. Lightly, okay. If you could go to my website, I spoke for one of the market maker. They every month they ask me about my view. I'll post a short clip on my view since March, April, June. I think so far March, April, June. I think I'm quite on the spot. I say that for go and view the video because I will explain that candlestick, and also I mix with some psychology as well. So in March, I say that my view for the rest of the year, it should be down, because if you look at the first quarter of this year, the US index, okay, I'm talking about S&P, not with CME, but with another market maker. They are not exchanged, their market maker. Now, I want to bring although I can't show the chart right now, but I just want to bring you we just have to, our mind, we just have to picture a chart, okay? Now, so the first quarter means that I want to bring you to the quarterly chart right now. Quarterly chart for this year is from Jan to March, that's one quarter. The whole Jan to March, it was a black stick, okay? Black candlestick. But last year, the last quarter between October to December, it was a positive stick. So it's an engulfing body, right? So when we study into the quarterly chart, so it gives me a sense, of course, when we study in the quarterly chart, it means that we want to have a sense of the long-term view. So in March, I posted this video. I say that based on the quarterly chart, my sense for the market direction for the rest of the year should be challenging, because it's a bearish engulfing body, means that I do not think you'll break the high, the January high. I do not think so, okay? Although the market seems like it's pushing up. But as we move on to April, I study into the last few weeks of March, we study into a weekly chart, W-E-E-K, weekly chart. And we could see another bullish engulfing body on the weekly perspective. Now, the time perspective became very different. So very specifically, I say that from April, beginning of April onwards, we're expecting a rebound, okay? Now, so I say that, but we have to make it very clear that on the long-term investment, that became the profiling very, very important. On the long-term investing, we look at quarterly chart, monthly chart, it is down. So I'm very cautious if I'm going to buy stocks and hold it for too long, because my quarterly doesn't speak well. But as a trader, I look at weekly chart, daily chart. On the weekly chart at the close of March, it indicates a bullish engulfing body. Okay, if you can go and look at the video that I have, a bullish engulfing body. And since then, from March until now, the market pulled up. But I still remember what I said about the long-term trend for the US market. I do not think you'll break that high. So okay, now the question is this. Is this pull up, is it a turnaround to break the previous top? Or is it a retracement for more selling to come? I would prefer to stick to the second opinion, that likely it's going to be a retracement, maybe for more selling to come. And I'm prepared for the next few days or weeks, got to study about the market and prepare to sell short if the opportunity arises. So that's my view. If you ask me, is it a buy or sell? I would say that short term, very short term is still quite bullish, but long term, I'm already turning bearish. Okay.
So there's also another question which is quite related to this. Okay, this is from Nagapan. So he has bought Amazon and Alphabet about 2 months ago. They are up about 20%. So based on your view now, and if you were him, would you keep or sell them for profits right now? It really made 20%.
It is you, it's not me. So let me ask you this question, very important, because whenever we do something, we have to plan ahead. So I'm a gun, right? So when you bought the Alphabet shares, at the point of time before you buy, what was your plan? Do you intend to place it as a long-term investment or short-term investment? What was your plan? So I have to turn it around to ask you this question. What was your plan? So because I cannot speak on your behalf. So if you ask me whether should I buy Apple now, then I got to ask myself, since I'm pretty much negative, if I were to buy all this blue chip stock, I would likely to be position myself to be a short-term investor. Means that I still want to hold on to a very short-term view, because the headwind is very strong. And if I'm going to start buying right now, when I say start buying, means that I have no position in the past. That means I've not built the foundation yet. This is a new purchase, and you have to understand that when, as an investor, when I buy now, I'm buying, honestly, if you look at the historical chart, you're buying around the high. Of course, you may say that buy high, sell higher. That one I understand. If you say buy high, sell higher, it means that you are positioning yourself as a short-term investor and short-term trader. That means you only want to trade it. Okay. So now something about investment you have to understand here. yeah, it's running late, so I think we just keep it as a last question here. Is that as an investor, long-term investor, and maybe short-term investor, I just want to end this with you, is that as an investor, when we buy, we don't just keep on thinking about the upside. We also have to remember the downside. Hopefully, it's like when we buy, I also have to be mindful about the downside. If it fail me, we're gonna drop much. Okay. So that's a very important question. As an investor, when I buy, I don't just focus on the upside, but I also have to acknowledge what is the potential downside risk. Is it huge? So if the answer is huge, then you got to maybe calibrate yourself that maybe perhaps not if you start buying, not to be a long-term investor, but maybe you switch to the other quadrant to be a short-term investor and maybe being a short-term trader. So that's what I recommend. So with that, thank you so much for staying through. Now it's 20 minutes past 9. So yeah, so I think thank you for engaging me, all this wonderful question. I hope that yeah, Singapore just I think was it 19th of June, we can walk free. So I hope that I long to go Malaysia. In fact, end of this year I already make plans that I'm going to rent a car in JB. I'm going to drive from across whole Malaysia all the way to Penang. I take a 10 days trip. I do not think that me and my family is going to fly anywhere. So this is my plan for end of the year. I hope that I can go to KL to visit you guys if the opportunity allows. Yeah. So thank you so much, Benny. Thank you.
Awesome. Thank you, Kwon Hao. And guys, if you have any more information, please do contact CGS CME Futures. I know there are some questions about whether index is related to CFD and so on and so forth. So to understand more about the product, contact them. They are prepared to receive your call anytime. So please do contact CGS CME Futures to understand more about these products. All right. So before we end, we actually have a Mandarin session on spotting and evaluating fast turnaround companies, which is on our Facebook. Mandarin Facebook is also tagged on the comment section. Please do join us over there. We have Ricky and SK who will be sharing with us, of course, on our local Bursa Malaysia market, how to spot and evaluate using data. All right. So with that, Kwon Hao, thank you so much once again for joining us. It's been a pleasure. I hope that we are able to see you when you come down to KL and bring your caravan with us and meet us in KL.
Okay,
So yes, thank you so much. And guys, thank you for joining us as well.
All the questions.
Yeah, and thank you for your questions. Thank you for joining us, and we'll see you again. So tomorrow we have our Kopi Time session. We'll see you again tomorrow. Thank you very much and good night.
Yeah.